Quick question. If you're pulling in $250,000 a year in retirement, are you rich? Most people would say yes. You're comfortable, you're secure, you're doing way better than average. But here's what the Federal Reserve data actually shows. At $250,000, you're barely scraping into the top 10% for retirees. You're not even close to the top 1%. And when you see the actual number it takes to crack that top 1%, it's going to change how you think about retirement income entirely. But here's where it gets really interesting, and this is the part that almost nobody talks about. The income threshold for the top 1% isn't the same at 65 as it is at 75. In fact, it drops by nearly half once you cross a certain age. And the gap between the top 10% and the top 1%, it's not a gap, it's a chasm that reveals something fundamental about how wealth actually works in retirement. I'm John Norberg, and in the next 15 minutes or so, I'm going to show you the exact numbers from the latest Federal Reserve Survey of Consumer Finances, which I'll link in the description, and what it takes to be in the top 10%, what it takes to be in the top 1%, and why one of those numbers drops dramatically after age 75. But more importantly, I'm going to show you why chasing these numbers might be the wrong goal entirely, and what you should be focused on instead. Because by the end of this video, you're going to see that the most important question isn't how much income do I need to be in the top 1%. It's how much do I need to live the life that I actually want? And the answer to that question might surprise you even more. So with that introduction, let's get into this latest edition of the Financial Prof series. Alright, so before we get into the numbers, let's clarify what we mean by retirement income. We're talking about total annual income from all sources. So this is things like Social Security benefits, pension payments, distributions from IRAs and 401ks, investment income and dividends, rental property income, any part-time work or consulting. It's your gross income before taxes, the total amount coming in the door each year. And the data we're using, as I mentioned previously, comes from the Federal Reserve's Survey of Consumer Finances, which is the gold standard for understanding household wealth and income in the United States. They survey thousands of families every 3 years, and the latest data gives us the clearest picture we've had of what retirement income actually looks like across different age groups. Now here's where it gets interesting. Retirement does not look the same at 60 as it does at 75. Your income needs change. Your spending changes, and the income thresholds that put you in the top tier change as well. So we're going to break this down by age group to see what it really takes to be in the top 10% and top 1% at different stages of retirement. Alright, so let's get started with the age 55 to 64 age bracket. These are your early retirees, people who left the workforce ahead of schedule by maybe taking a buyout, selling a business, or maybe they just hit their number and decided to call it quits. Maybe this is you. This is also the age group where a lot of people are still working but starting to think seriously about retirement. Some are winding down, some are transitioning to part-time work, and still others are in full accumulation mode. So what does it take to be in the top 10% of income for this age group? Well, the answer is $316,000 per year. That's the threshold. If you're pulling in $316K or more annually between ages 55 and 64, congratulations, you're in the top 10% of earners in your age bracket. Now think about what that means practically. If you're still working, that's a solid executive salary or successful business owner income. If you're retired, it probably means you have a significant portfolio, 7 or perhaps even 8 figures, and you're drawing it down strategically while potentially delaying Social Security to maximize those benefits later. But here's where it gets interesting. The top 1%. To crack the top 1% of income for ages 55 to 64, you actually need $1.481 million per year. And that's not net worth. That's income. Money coming in every single year. So what does that actually look like? Well, you're probably looking at substantial investment portfolios, a business ownership or equity stakes with distributions, real estate holdings producing significant rental income, potential deferred comp or golden parachute packages from corporate exits. This isn't "I saved really well" money. This is "I built significant wealth through business ownership, high-level corporate positions, or substantial investment success" money. And here's what's fascinating. The gap between the top 10% at 316K and the top 1% at $1.481 million is over 1.1 million. That's not a step up, it's a canyon. So now that we've looked at that age bracket of 55 to 64, let's look at 65 to 74, the heart of traditional retirement. This is where most people are fully retired, Social Security kicks in, you're drawing down from your portfolio in an ordered way, and to be in the top 10% of income for age 65 to 74, the number you need is 254,000. Notice, though, that's lower than 55 to 64. And that makes a lot of sense. A lot of earners in the previous bracket are still working. By the time people hit 65 to 74, most are truly retired, so income drops off, and you're probably living on investment income, Social Security, and pensions. But what's interesting is that $254,000 is still substantial retirement income. If you're pulling in $250,000 in your 60s and 70s, you're living very comfortably. So let's put that into context. The average Social Security benefit is about $25K per year. Even if you maxed that out and got close to $50K per year, you'd still need another $200K plus from other sources to hit that top 10% threshold. That typically means you've got a portfolio in the $3 to $5 million range, assuming you're following something close to a 4% withdrawal rate. Throw in Social Security, maybe a pension, and you're there. But now let's talk about the top 1%. To be in the top 1% for age 65 to 74, you need $1.54 million. That is $1.545 million to be exact. Now that's a huge jump. And my theory is that people who are in this age bracket are winding down. They're people who have built serious wealth, but they've structured their retirement to build massive ongoing income, maybe royalty streams, high net worth individuals with diversified investment portfolios, executives with substantial compensation packages that take them into what's a little later than what people usually retire at. People who have built income-generating machines that keep producing well into traditional retirement. All right, so let me surprise you a little bit. We're going to talk about the 75 plus age group, where the data gets really interesting. You'd think that the top 1% income threshold would stay high or maybe even keep going higher. After all, if you've been in the top 1% your whole life, you've probably accumulated even more wealth by your mid-70s, right? But that's not what the data shows. For age 75 on up, the income needed to be in the top 1% drops dramatically to $812,000 per year. That's nearly half the threshold of ages 65 to 74. Again, remember, the top 1% at that age bracket is $1.54 million versus $812K for the 75 plus bracket. So what's going on here? Well, there are probably a few things at play. First, spending naturally decreases. By that time, people are traveling less and living more simply. Those initial go-go years of retirement turn into the slow-go and eventually no-go years. Second, wealth often gets transferred. High net worth individuals start significant gifting strategies, moving assets to children, grandchildren, and trusts. They're intentionally reducing their taxable income and estate size for tax and estate planning purposes. Then also, the composition changes. Some of those ultra-high earners in the 65 to 74 bracket simply don't make it to 75 plus, but the surviving population at 75 plus may have different income characteristics than younger retirees. And then another thing is that income strategies shift. By 75, a lot of people have already done their Roth conversions, repositioned their assets, and done their estate planning, and they're living off a smaller percentage of wealth while preserving the rest for heirs or charitable giving. But what's remarkable is even at $812K, you're still talking about an extraordinary level of retirement income. That's roughly 16 times the median income of retirees, and it's approximately 32 times the average Social Security benefit of about $25,000. This is massive when you compare it to the averages. So let's step back for a moment and look at what these numbers actually reveal about retirement in America. First, the top 10% is achievable with a disciplined savings strategy, but the top 1% is a different game entirely. If you're aiming for the top 10%, 254,000 to 316K, depending on your age, that's reachable through consistent high earnings, maxing out your retirement accounts, smart investing, and living below your means for 30 or 40 years. But the top 1%, that's $812,000 to $1.545 million per year. You don't just get there by saving 15% of a good salary. You get there through business ownership, executive compensation, extraordinary investment success, or other matters. Now, another piece of the pie is that your age matters more than you think. The income you need changes on where you want to retire, right? Early retirees who are in the top 1 or 10% are oftentimes still earning. But by 75 plus, even the top 1% threshold drops substantially, again to 812K. That means that your retirement strategy changes as you age. Now, third, most people vastly overestimate what rich looks like in retirement. When I talk to clients about retirement income goals, they often throw out 200 or maybe 300K per year. When I tell them that puts them in the top 10%, they'd be doing better than 90% of Americans in their age group, they're kind of shocked. You see, we're conditioned to think we need more than we actually do. If you're pulling in 100,000 to 150,000 annually in retirement, you're doing significantly better than average. Okay, fourth, if you're lucky enough to be in the top 10 or 1%, this is crucial to have a plan. While having a financial plan at any level is important, the higher your income and net worth, the more important it becomes to work with a competent and capable financial planning firm that goes deeper than just how much should we Roth convert this year, but into all of the ancillary pieces, like the deductibility of trust management fees, or the asset succession plan to make sure that this significant wealth doesn't tear apart the next generation. And if you feel there might be gaps in your current plan, we're here to help, because ultimately, your sense of fulfillment will hinge largely upon the intentionality behind it. All right, now here's what I really want you to take away from all this, and it's not about hitting some arbitrary income threshold. After looking at these numbers, 254,000 for the top 10%, 1.5 million for the top 1%, it's easy to feel like you're either crushing it or failing. But the truth that gets lost in the data is this: money's not the end goal, it's the means. The number on your retirement income statement doesn't tell you whether you're winning at retirement. What tells you that is whether your income, whatever it is, allows you to live the life you actually want. I've met clients pulling in 400K per year who are stressed and unfulfilled, and I've met clients living on 75K a year who wake up every day grateful to be alive. And the difference isn't the number, it's the plan behind the number. Because retirement planning isn't really about accumulating the biggest pile of money. It's about answering a fundamental question that we all have to ask ourselves at some point. What do you actually want your life to look like? Again, what do you actually want your life to look like? Not someone else's, yours. Do you want to travel, stay close to family, pursue hobbies that may be expensive, or live quite simply? Support causes you care about, leave a legacy? There's no right answer, but there is your answer. And once you know what that is, the income question becomes much simpler. How much do I need to fund that life? And how do I structure my assets to generate that income as efficiently as possible? And that's where real planning happens. So let me give you an example of what I mean. Say you've determined your ideal retirement costs $120,000 a year. You want to travel a couple times, spend time with grandkids, help them out with college when they get a little older, and have flexibility for the unexpected. Now you could look at the data and think, well, I'm not in the top 10%, so I must be behind. But that completely misses the point. If you have, say, 40,000 coming from Social Security, a small pension providing 20K, and you can generate 60,000 from a $1.5 million portfolio at a nice sustainable 4% withdrawal rate, then you're fully funded for the life you want. You don't need 254,000. You don't need to be in the top 10%. You need 120K and you have it. The real question isn't how do I compare to others? It's does my plan work for me? And that's where strategic planning makes all the difference. Because it's not about maximizing income so much as optimizing the relationship between your resources and your goals. Structuring withdrawals to minimize taxes, for instance, or timing Social Security so that you can maximize your lifetime benefits. Or balancing Roth conversions with your current tax rates. Making sure you have flexibility for healthcare costs and market downturns and life changes. And about knowing what you can spend without fear of running out. Because here's the liberating truth. You don't need to be in the top 1% to win at retirement. You just need a plan that's aligned with what actually matters to you. And honestly, some of the wealthiest people I know, measured in life satisfaction, not dollars, are the ones who figured out what enough looks like and built intentionality around that. So, if you take nothing else from this video, I want you to take this. The data that we've looked at today is fascinating. It tells us what the top 10 and the top 1% look like, and it shows us how retirement income changes with age. It reveals the enormous gap between comfortable and ultra wealthy. But none of that matters if you don't first answer the question, what does a successful life, a successful retirement, and a successful passing on look like for me? Not for your neighbor, not for the 10% or the 1%, for you. Maybe it's spending every winter in a warmer climate. Maybe it's being available to babysit your grandkids a few days a week. Maybe it's finally having time to paint, to write, to read that stack of books that have been waiting for you. Or maybe it's just having the peace of mind that you're not going to run out of money and that you can handle whatever comes. Whatever it is, that's your North Star. That is what your plan should be built around. And once you know that, the income question becomes tactical. It's not about comparing yourself to benchmarks. It's about engineering a solution that funds your life in the most tax-efficient, risk-managed, and sustainable way possible. That's the planning I care about. Not hitting some arbitrary percentile, but making sure your money serves the life you want to live. Alright, so at the end of the day, here's the bottom line. Yes, the top 1% of retirement income ranges from $812,000 to over $1.5 million. Yes, the top 10% ranges from $250,000 to $316,000. But these numbers don't define success. Your goals do. The best retirement plan isn't the one with the biggest number, it's the one that's designed around what actually matters to you and structured to deliver that as efficiently and sustainably as possible. And if you want to see whether your current finances are aligned with your actual goals, I'm offering a free personalized 5-minute retirement plan video so that you can see where you stand and where there might be gaps and how you might go about fixing them. No meeting, no obligation. It's recorded just for you using your numbers, and all you have to do is click the link below to get started. Because at the end of the day, retirement isn't about being in the top 1%. It's about making a life you love and making sure your money is working in service of that. I'm John Norberg, Certified Financial Planner, and in the meantime, I'll see you out there.